So we'll just give it a couple minutes here for everybody to log in. We'll start at 9:05. Well, everyone, it is 9:05. We're going to go ahead and get started. My name is Mike McMeans. I'm the president of the Central Ohio FPA for this year, and just glad to have you. It's a nice spring day again. It's weird that it's spring already. I haven't really thought through the fact that it's spring and March, but except for the fact that I do turn one more year this month. I'd like to first recognize our platinum sponsors and people who support this organization first. Locor Funds, which is our featured partner that we'll be hearing from Chris here in a second. Calamos Investments, FinGuard, Harbor Funds, and Palladium Group are our platinum sponsors. Thank you very much. Our gold sponsors this year so far are ARM CPAs, Park National Bank, Capital Group Nationwide, and Symetra. So glad to have all those sponsors. We could not do this without you, and we appreciate you being a part of the organization. Now I'd like to introduce our featured partner, Chris Janicki with Locor Funds, and take it away, Chris. Give you a few minutes here.
Thank you, Mike, and good morning, everyone. It's great to be here. Appreciate the opportunity to connect here virtually. I was thinking about last year we became a sponsor for the first time, Locor. And I think my little intro piece like this last year was the meeting before all hell broke loose. And so anyway, it's good to be back. I think we're on the back end of this pandemic and excited about things. So what I'd like to do in the next 5, 6, 7 minutes is just introduce you to Locor Funds, reintroduce you, and then talk just a little bit about where we fit in portfolios, and then finally a comment about why our strategies, we believe, are more important than ever right now. In fact, reflected by the fact that our assets grew by about 40% last year. And in a world where active managers are shrinking and alternative managers are either shrinking or growing, we're excited to be on the growth side of the equation. So with that said, just to introduce myself, I live in Northeast Ohio, beautiful Hudson, Ohio, for the last 30 plus years. And I've been wholesaling for a little over 30 plus years. And the first 15 were in the traditional long-only space. I started out with MFS. Some of you that I've met and know over the years, that's probably where we met. And so I spent 15 years in the very traditional long-only wholesaling business, and then about 17 years ago, sort of crossed the divide into the alternative investment space, and so I've been exclusively focused on that for the last 17 years. I'm a principal in the Locor Fund Group, and we are a firm that is completely dedicated, exclusively focused on bringing you solutions that have low correlation. Our name is probably obvious, but short for low correlation. So everything we do is focused on bringing you and your clients strategies that move differently than your core positions in stocks and bonds, provide consistent returns, and importantly as well, usually do really well when equities and fixed income are not doing well. So we're really, the third leg of the stool, a third basket of strategies that's designed to be independent from your core stock and bond portfolios, provide some protection, when equities are not doing that well. We were founded in 2003, so we've been at this for about 18 years. Back in the day, it was all private placements and high net worth clients only. But next month, it'll be 10 years since we introduced our mutual fund group, and we've launched 5 different daily liquid open-end 40 Act mutual funds that are available everywhere. We still offer a couple of private placements as well for higher net worth. But again, exclusive focus on finding different ways to diversify and protect assets, just a different sequence of returns in your portfolios. A couple of our funds have been consistent award winners, Lipper Awards, that kinds of things. So we've become one of the faster growing, if you will, liquid alternative fund groups. Our business model is that we don't manage money, we're all sub-advised. We have a team that we brought out of the institutional world that we use a very institutional process for manager selection. And so we identify great alternative investment managers, vet them, make sure their process is repeatable in a daily liquid format. And we also monitor them for style drift and or, all the things you would monitor some advisors for. So in 10 years, I think we've actually, 2 of our sub-advisors, we've found that, trying things they had never done before. And we said, that's not why we hired you. So we can replace. But what we typically do, what our most successful funds have been those where we blend alternative investment managers so that they complement one another within the fund. And what we like to have is best in class sub-advisors. Some of our sub-advisors are famous. I mean, they're some of the biggest institutional managers in the world. One in particular manages about locally. They're based in Connecticut, where most institutional managers are. $600 million or so for the Ohio PERS, right? And so that's the caliber of sub-advisors we have in our funds, but our job is to blend them so you get a consistent, smooth ride. I like to say we have low correlation among the 2 or 3 managers within the low core funds. So where do we fit in portfolios? I mean, in a word, if you're running balanced portfolios, let's say it's a client who's a 60-40 client, 60 is to grow the assets. This is obvious stuff, but we're part of the 40. We are not there to compete with equities. We are there to provide, like bonds have done traditionally in the past, a consistent stream of returns that doesn't correlate to stocks and can do well when stocks are not doing well. And so I mentioned at the top that we grew our assets just under 40% last year. I think that's for a couple reasons. One is when the pandemic hit, call it the COVID crash, stock market went peak to trough about 33%. One of our strategies was up 6% during that peak to trough, finished the year up 9%. Another of our strategies was flat during the big down in stocks and finished the year up about 7%. And so delivering returns when you want them and consistent returns, frankly, better than fixed income. So why are we more important than ever? I would suggest that it's, and why are we making a lot of money these days? Number one is volatility is back and we're performing well. Number 2 is there have been consistent concerns about inflation. We got massive stimulus, we got a recovering economy. I mean, you've read what I've read, I'm sure. And we have some strategies that are tailor-made. And frankly, the third reason that we're very timely is bonds are challenged. I mean, we've got a study we call It's Just Math. I had to share with you. It's not a capital markets call on bonds. It's just looking at the math of investing in bonds. So 5 strategies, 2 are global macro, big category. And so stocks, bonds, currencies, commodities, globally, long, short, typically do really well during a crisis or a significant sell-off. We have a commodity fund that I would argue is the best commodity fund in the world for America. It's long, short. And so it was the one I mentioned a minute ago. I don't know if you remember, oil was crashing a year ago. Happened to have short positions in energy, had long positions in precious metals, had short in base metals like steel and copper. So anyway, really interesting, getting a lot of interest in our commodity long short fund. And then we have a hedged equity product that's unique and an income alternative, really interesting strategy that has 0 correlation to bonds. So that said, I'm going to step aside. I'm excited to hear about the Bitcoin, et cetera, discussion to follow. Thanks, everyone.
Yeah, thank you, Chris. Really appreciate your what you bring to the table. I'm excited too. It's been a subject that, quite frankly, is hard to get good information on. You feel like you can look it up online and there's all kinds of stuff, but it doesn't really get coordinated into a single message. So I'm excited too. Before I get to the rest of the announcements, I think I've mentioned before, I've had a business coach since 2007. And one of the things I wanted to do as president this year was just bring a little bit of that to the table. Not in any long way, but just to kind of tell you what I've been learning to hopefully bring some value for the people who are my peers and do what I do. So this week, this entire year, I get coached every week, really every day, but every week in a more concentrated, focused way. And this past week was about being a 21st century leader. And my coach said, what is the number one quality in a 21st century leader? If you had to identify that, what would it be? And a lot of things come to mind, but nobody in the audience guessed what it was. And it's confidence. It's the most powerful force in leadership, easily. People are looking, and I forget the person who said this, but people are looking for smart people to tell them what to do. We, as advisors, can take that too far. It's not that hard, but it is very hard to have humble leadership. And as far as, if you have a family, this is not exaggerated or unfounded, but confidence is the meal ticket that will take your kids wherever they want to go. And I've tried to help instill that into my kids. Confidence invites people to be relaxed around you, as you are a confident person. So I got really excited about that. I have to check myself, quite frankly. My kids, give me a hard time. I'll be, they'll be talking about, how bad I am at this or that, because they're a little sarcastic. And then I'll tell them how awesome I am. And they have to know that that's tongue in cheek. So I have to kind of backpedal. But I just thought it was a really good point. We don't, I think I try and be as intellectually honest as I can be. And I ultimately will sometimes back away and say, these are two really good options, without committing. And it's important to commit. So today, regarding the poll questions, the Ohio Department of Insurance requires that 3 random poll questions be answered to verify attendance for those seeking Ohio Insurance CE. You must answer all 3 in order to receive credit. And please do not have anything else open in your browser, or you may miss the poll question. I think Phil knows this, but please do not announce the fact that the question is on the screen. That sort of defeats the purpose, and actually can kind of get us in a little bit of hot water. So don't do that. Also new, the CFP board is also requiring validation of participation. So we will have 5 poll, and we've not had this before, so this is new. So we will have 5 poll questions relating to the materials that will be announced and discussed. So that we'll talk about, and we ask that you answer those too. Regarding Q&A, please use the Q&A box. You'll see it in the bottom center of your screen for most of you, assuming that you're on a computer and not on your phone. For questions directed to the speaker. If you have another question not related to the program, you can definitely email Debbie Lee at admin@fpacentralohio.org to be answered later in the day. The recordings and presentation PDF will be posted this week under past events on our website. So that is this week. Last time I got myself in a little bit of hot water because I told you to be ready in about 24 hours. That is not true. So give it a little bit more time than that, but it will be available this week. So without further ado, I want to introduce Phil Ratcliffe. If you remember attending our meetings, which, by the way, Chris, hopefully you spoke at the last in-person one. Hopefully this is one of the last virtual ones, or only virtual ones. Phil was probably somebody that you could see when you walked in the room, because he's taller than just about everybody. He's a CFP and the founder of Rebel Financial, a financial firm that he started in 2013 that has grown into one of the largest fee-only RIAs in the Midwest, and fastest organically growing in the country. He specializes in advanced planning such as executive benefits, stock options, charitable giving, and complex estate tax planning, and building the business processes. Previously, Phil attended USMA at West Point and served in the United States Army for 8 years before settling down into finance in 2003 at American Express Financial Advisors. He serves as the FBA Central Ohio Government Relations Director. So if you have a question about our profession as it relates to politics, Phil is your man. So please join me in welcoming Phil. Take it away.
Thanks so much, Mike. I think that's about the best introduction I've ever gotten. So really appreciate it. I feel like I'm going somewhere now.
There you go.
So let's dig into the slides. I'm gonna answer the questions at the end because I'm a really bad person about getting on tangents about stuff, especially things that I like this. So we'll save the questions till the end and hopefully get to most of them. So then that way I can get to most of the content here. So let's look here and make this full screen for you. And I really made this presentation to be different than a lot of the presentations that you may have seen in the research that you've done, because I want to take it from the perspective of practically, what is this thing, cryptocurrency and blockchain, and why does it matter? And then from a perspective of one of your peers, in terms of, is it something we should be using with clients? If so, how could you do it? When? What would be the point? And it's great that we had the sponsor that we did today, because we'll get into talking about asset classes and low correlation, et cetera. So let's dig in. And again, my goal with this is not to replace and do a bunch of techie stuff about what you can read on Wikipedia, right? So you can read the whole history on there. There are tons of videos on YouTube and other places that explain the history of blockchain and where it came from. But I do want us to get on the same page and not just assume that everybody knows exactly what we're talking about. So blockchain is this technology that was kind of dreamed up theoretically almost 40 years ago, right? So it's a lot older than people think. And, of course, back then, technology wasn't quite to where it needed to be to actually be able to implement this successfully. And so it took all the way to 2008. And of course, the inception there was Bitcoin. And I think now you see a lot of blockchain, cryptocurrency for a lot of people in the media and just random people. Bitcoin is almost like synonymous with cryptocurrency. But blockchain, the technology, is a whole lot bigger than that. And that is the real thing to really be excited about. And so just really simply, blockchain is like this decentralized network of nodes that keep the information or the chain of information. And for our purposes of we're thinking about a lot of times that is transactions. So if we're thinking about a currency like Bitcoin or so it's keeping the history of all these transactions happening. And then people that are doing work, and we'll get into mining and so the decentralized nodes all keep a copy of this chain, and they verify that they're all right all the time. And then people that are doing the work to add the next step or transaction, et cetera, have to do this hashing, encryption, decryption to be able to prove the work. And once they think they've got it, they put it up, and all the other nodes will verify. Once enough of the network verifies that it's right, then all the chains will update across the network. And the really exciting thing about this is it's not controlled by the government, and hopefully it never will be. It's not controlled by corporations. It's not controlled by some powerful person. It is very decentralized and spread around. Like I'll show you in a little bit, like I'm a miner. I've done this for years, and I'm going to show you a couple of my rigs. I'm helping to process the transactions and hash per se. So let's keep moving on. And the next thing is talking about Bitcoin, because it's what's in the news, right? It's what your clients are asked about. Like Bitcoin was up so many hundreds of percent, or since this time it's been up so many 1,000%, right? And so this is what's really started the discussion. And then Elon Musk bought this much, and these companies are starting to invest in it, and they're, institutions, big financial companies starting to put money into this. So, it's getting legitimacy, right? And then of course, Bitcoin was made kind of different than a lot of the other cryptos that we'll talk about, to where it has a limited supply, right? So there's only going to be about 21 million coins made over its life by like 2100 and something. And exponentially, it gets harder over time to mine those to where they're distributed out. And so right now we've already made like almost 19 million. So like you could see how much exponentially harder it's getting. Most of them that are going to be in circulation unless they change something have already been made. Interesting concept of Bitcoin, and you'll get a lot of people that call it digital gold, right? And that's why it's got some analogies to gold in terms of limited supply, the fact that it's kind of commoditized. You could use it to buy things, even though most of us aren't having gold coins and going out and paying somebody with them. And I think that's very much going to be like Bitcoin, because personally, I'm not a big fan of Bitcoin, but it is very unique in the world. A lot of institutional investors are going to use it. It's not a very good currency for buying and selling. We'll talk about that a little bit, but it is got those unique characteristics. You're getting a lot of interest in it. There's limited supply. And so a lot of people say, well, you've already missed that boat. You know, it's up at 50,000 now. Well, I could see this going into the hundreds of thousands, maybe crushing 1 million before the end of the decade. So when people talk about you missed the boat, there's no way, no way. And I don't even like Bitcoin. Okay, so let's keep driving on. We're gonna throw the poll questions up here intermittently. I think how we made it originally, where she put all 5 and was gonna put them at the end, but just answer the first one when she throws it up here. Okay, I'm gonna keep driving on. Hopefully people have a chance to do that. It's not a horribly difficult question if you're paying attention. So moving on, and to me, like, what's the exciting thing about cryptocurrency and blockchain? And that is the altcoins. And so you may have heard of Litecoin. Litecoin was developed kind of to address some of the shortfalls of Bitcoin. Sometimes it's known as digital silver, right? And so the really good one, though, is Ethereum and Ethereum-based tokens. And so with Ethereum, the interesting thing about it is that you can actually run code and programs off of Ethereum. And so they've made all these tokens. So when you see, like, there used to be just a few cryptocurrencies, and now, you know, people are like, there's hundreds, there's thousands, right? And like, oh, how do you even know what's going to be good? A lot of these things are being made off of Ethereum, and they do different things. So to give you an example of how, like, cryptocurrency is really going to change the world, you could look at like Ripple or XRP, and a lot of times these cryptos like do things like facilitate institution to institution transfers and trying to take out some of the middlemen. One of my favorite examples of just like a coin is BAT, Basic Attention Token. And so when the internet was invented way back in the day, you know, there was this real big fight, and the real pure people that their belief was, hey, the internet should be based on micropayments. So if I wanted to show an ad, you get paid a little micro % of a cent to see this, to watch this ad. If you wanted to read this article, you paid 1/10 of a cent, you know, to Wall Street Journal, right? But unfortunately, back then the technology wasn't there. They couldn't accomplish this. So Basic Attention Token, that's its goal, is to try to get away from this search engine advertising thing back to kind of the core principle of, without intermediaries, us being able to pay for information or getting paid for our attention, right? It's quite elegant. And a lot of these things are going to solve a lot of problems like this. And so when people talk about, you know, blockchain and some of these cryptocurrencies, it's unfortunate that everybody just thinks it's currency. But yes, you can use them as currency, but the underlying technology is so much more than that. So there are lots of them out there, and a lot of them do a whole lot of different things. So if you ever get into it, even if you want to like play with a little skin in the game, just buying some of the currencies and reading the descriptions of what the problem is they're trying to solve, to me is just, it's fascinating. And it's a lot like when you were, maybe if you were young and had the experience of, you know, uncle or dad or grandfather getting you to buy a stock in something that you like Disney or something like that, right? So let's drive on. So we'll do another poll question real quick, try to throw them in here. That pop up. Get it out of the way. So that one didn't throw you guys off. All right, so real quick, talk about mining, because a very important part of cryptocurrency and the whole process of decentralized is that it is decentralized. So what's the incentive for anybody to have a machine or a computer or what so to be able to provide these decentralized processing of transactions to validate the whole blockchain to make sure that hopefully it's inviolable and nobody cheats the system, etc. So mining is the process of people getting paid to provide the processing, hashing power of doing this. And so you can kind of see here's some pictures, and I'm going to change my camera view if everything works correctly and show you a couple of my machines. But you can kind of see this is a pretty elegant, simple rig of just using regular graphical processing units. So the same type stuff that your marketing person may have in their computer to build marketing materials for you, render video, or if you or your kid is a gamer, to play those high graphics games, these are the types of video cards that you would buy that go inside of there. And it's just an open framework with a, motherboard right there that has the processor and a RAM in there, and there's your hard drive. And then these are ASCII machines. And so they are specifically built to hash a specific type of code for a certain crypto or what so. So they are very efficient. Massive and just I pulled this down yesterday just from eBay, so you kind of see some of the ones that are selling, and anywhere from, depending on what's the profitability of the underlying crypto and the hashing that you're doing, how the stability, consistency of that has been over time, and of course the practical things like how much does it cost to make the unit. These things go from anywhere from $300 a piece to $10,000 a piece. Okay. And so, I mean, this is a thriving ecosystem, and you'll have like warehouses of these things. You can just, Google crypto mining and just look at the images, and you can see some of the warehouses full of these. So let me hopefully see if this works. And I'm going to flip my view right here, see if my camera works over there. Looks like it is. Okay. And so, let's see here. So you can kind of see, I've got a couple rigs up here. So you can see my main one right here, and this is the GPU mining rig. And so you can see the various video cards that are slotted up here, and then how everything's built inside of there. And actually, this rig sits in my house at home, and I've got it built up into almost the top part of the ceiling with a return duct going down. So it actually heats my house like in the fall and spring and winter. So like a lot of people that complain about a lot of this stuff is wasting energy. But think about if it did replace some of the financial system or what so, how much are the banks and the financial companies wasting in being those middlemen, right? So this has probably efficiency-wise a whole lot less waste than that. And then here's an actual like ASCII machine right here that you can see. And these are actually in my office, and I kind of have some of them hung around the hallways, do kind of the same thing in terms of heating the office when it's cooler and what so, and also providing kind of a background white noise, which practice management wise, is pretty good as well. So this machine right here probably makes anywhere from about $5 to $25 a day, depending on how profitable the cryptos are. And this one probably, $5 to $30 a day, but it does vary. It does vary. So let me flip back over. Back over here. Get back to the presentation, and all right, flawless. I was worried about that. All right, so moving on, let's do another poll question real fast. I should have told Debbie to throw that up while we were switching everything back over. All right, so now we will move on from my tech nerdy part of the presentation to more of how does it relate to what we do, our clients, et cetera. So, kind of looking at this from an asset class perspective, and thanks to my marketing associate, Dylan, he kind of took like some of the things that I basically wrote on a whiteboard and turned it into this nice slide for us. But I like to think about things like this, and I'm sure you've had lots of conversations with your clients on how you explain to clients like what their what things are to invest in and what they do, right? And so, you know, I like to think about it, you know, here's the capital and the labor, right? If you want to think about it really old school, but, you know, our stocks, our equity, you know, the ownership we have in the exponential growth of human progress, right? So like we own that. And I always like to do, that analogy. I think it was a parody out of, I cannot think of it. All right, it'll come to me. But basically, of explaining to people like how money multiplies through the system. And so, you know, you think about like if we buy a house, right, or build a house, okay, and a lot of people would say, well, you take your money, you buy the house, you don't have the money anymore. It's you just swapped assets, right? But that's really not the case, right? We take a piece of land, you know, say we spend $100,000 on it, and that goes to the contractor, and it pays the electrician and the plumber, and you know, all the different people that did different work. Fees go to the government for the local side of things. Those people go and spend that money on different things. You know, that probably goes into something that builds something else. And we're not left with nothing. We're left with something that has very much utility, you know, that gives us shelter, helps us to grow a family and hopefully raise other productive human beings. And then eventually, our experience has been that appreciates and we can sell it, make something else from it. So that money wasn't just $100,000, that money multiplied, right? So, I mean, that's a very simplistic explanation, but that is how that money multiplies over time. And a lot of these things are just going into this. So like when we think about bonds or lending, we're just loaning money towards that happening, and hopefully productively. Of course, people borrow money for non-productive reasons, but for our intents and purposes, hopefully we're primarily in our system loaning money towards this process of producing utility. And then of course our cash is greasing the wheels of this. Of course, it can be used for other things and it makes everything efficient, but really the real purpose of it in our capitalistic system is to be able to enable this and make this more efficient. And then commodities, all the stuff we use to be able to put into making things, right? So we're going to buy and sell them. It is just the base kind of components of the things we use to do that. And then if we want to kind of get tricky and throw this into here, then we have our labor, right? The work and ingenuity, that human component of doing things to actually produce this. Okay. And so when we think and try to put this all together about crypto and say, you know, what is it? What asset class is it? Again, I made this up myself. So, you know, anybody can have their own conclusion. I think a lot of people out there would try to say it's a currency and it's a commodity. I absolutely disagree with that, except for Bitcoin. So the Ethereum-based tokens, the ones that are actually going to change the world and make a difference, crypto is this, in my opinion. So it is primarily like an equity, like a stock. It is going to produce a ton of utility. Not all of them, just kind of like most of the stock returns don't come from all stocks, right? It comes from a small percentage. So the ones that actually end up working out, doing well, accomplishing the mission, say like that basic attention token that they set out to, are going to produce a ton of utility. Most of them that are efficient can be used as a currency. We can buy things with them. We can trade with them. They're very efficient in that. And they do work, okay? It's not humans doing work. But again, increasingly in our technological society, capital is replacing labor. And again, this is a whole different conversation and presentation that we could have, but capital is producing labor or replacing it. So like you think about robots, you can think about AI, you know, et cetera. And so this work, like we talked about, replacing intermediaries, different parts of the financial system. One of the quintessential examples, I didn't even talk about, like smart contract wise with Ethereum-based tokens, could be like getting rid of a lot of the middlemen in buying and selling a house. You know, so like it's crazy that we pay 4 to 8% of that transaction price. But if we had a smart contract that said, all right, look up to make sure that this person actually owns the title. There are no liens against it. Okay, they do. This person wants to buy the house. We do a what if thing to say, all right, they both agree to the price. Does this person actually have the money? Yes, they do. I'm going to take it and set it in escrow in this account. I'm going to take the title from this, set it over to there, do all the legal stuff that's going to make this. And then as soon as all conditions are met, boom, I give them each of theirs. And the reason why we can't do this and we pay all these middlemen is because we don't trust each other. We don't trust the government. We don't trust each other. We don't trust the companies. But if we can make a trustless system, which that's a lot of what these smart contracts and some of those cryptos are going to be able to do, that is a lot of work, okay? And it's going to provide a lot of utility, and we can use them to trade. So some people will say, yeah, maybe it's like a commodity, maybe some things like Bitcoin and Litecoin maybe. But again, I'm not convinced of this. You can make your own conclusion. But really, when you think about it, this is a very new and different asset class that probably is more like a stock than anything, okay? Keep driving on. So if you're thinking of it, you're like, whoa, well, maybe I should invest in this. You know, how do you do this? Okay, so first of all, we said you can mine it, right? And so there's really kind of three ways to do it. And again, I'm not going to get there. This could be a whole nother presentation and can get really into technical details. I'm just going to give you the overview. So there are three ways to do it. First of all, you could straight up try to mine straight up and say, I want to mine and do Bitcoin stuff, you know, and I want to get a Bitcoin. And I'm just giving this example, but it could be on anything. This is dangerous unless you have a lot of processing power, and not dangerous in like it's going to hurt you, but in terms of like you could waste a lot of money, because basically you are going to spend a lot of time and energy to mine and try to solve this problem. And if you go through the entire process and somebody else beats you or gets it first, you just wasted all that time and energy. So to really be successful at this, you need to be massive hashing power, okay? And so unless you have that, like where else is full and stuff like that, then you're probably going to do one of these two things. So this is joining pools. So with pools, a lot of miners join together. They combine their processing power together, and then when they earn a reward, they split it minus a small fee that you pay to whoever runs the pool. Then the last one, this is primarily what I use, because primarily most of my machines and stuff I have are like for VR. Like we do it for virtual reality, augmented reality. And then when we're not doing that, then I use the GPUs to mine. Okay, and this is an actual snapshot of like mine. And so, you know, 12 of my 20 units were online, you know, making about $35 a day. If I did that all year, you know, I'd make something like 12,000 some, running at almost half real. Now, minus energy costs. But fortunately for me, I have a lot of solar panels and stuff, so the sun pays for most of my energy. Not pays, gives. And then you can kind of see here, we're building up, get paid. So I get paid multiple times a day. It's a really live, awesome ecosystem. This is not some nerdy fringe thing. I'm telling you, it is. So anyways, it's complicated. So with this, I sell my hashing power to other people, and the program NiceHash optimizes which algorithm I should be doing and who will pay me the best price for my hashing power, so they can add it to theirs to have enough to have a high probability of getting a reward, right? So again, it's pretty complicated, right? Not many people are going to do it this way. So you can buy it. And I would have to say, for right now where we are in this place and time, this is probably what you want to do. Not as advisors for our clients, because this is fraught with custody issues right now, and just the practical of how good are these custodians, et cetera. So it's not ready for prime time to institutionalize it, but hopefully they're going to get there, or maybe our custodians will wake up like Schwab and TD and them and get with the program. I don't know if anyone saw, but there are, like Apex just got combined with a SPAC. And they are the ones that pretty much built the technology for Robinhood to take off. So, you know, maybe there's going to be an awesome new custodian, because they said they're going to use a lot of that money to try to work with RIAs and institutional investors. But anyways, let's talk about these. So there's really 5. I only put 4 of them up here because I really don't like Coinbase. So Coinbase is number 1. I had a lot of problems with them. I don't like them, but they are one of the biggest. You know, trying to, I think, go public or do a SPAC as well too. So they're big and up there. They have a couple-year relationship with USAA. So they're legit, right? Okay. And then the one that I probably like the most, that'll probably be first of the game for people like us, is Gemini. Gemini is really the exchange that is really trying to do it the most legit, work with regulators. They just got their SOC 2 certification. So they're working very hard to make sure that there's a lot of due diligence, there's customer service, they're, you know, trying to work with the regulators, et cetera. These other ones, are pretty good. I'd say Bittrex and Binance, it has the most trading pairs in terms of like cryptocurrencies. I trade on all of them. You know, I even have Robinhood. Robinhood's probably the best practical one. And it just kind of makes me mad, because I'm like, I should have this before retail customers. You should have it. We as RIAs and institutional investors should have this before retail people do. It's just crazy to me. But I can go on there and buy Dogecoin or Bitcoin, sell it, and then in the same day, almost a cashless transaction, go buy some ARK or Tesla. Like, we would be able to run portfolios with something like this, and the technology's there. It's just our custodians won't give it to us. So I put them in there because I have this, but there's only like 6, 7 cryptos you can buy in here versus like 100, you know, maybe, you know, 50, 70, 30 here. So a lot more trading pairs. I think there's more liquidity in some of these bigger ones. I'm not going to get into trading and the specifics, but don't do market orders on crypto. The spreads are outrageous, crazy, huge. Okay, so you want to do limit orders always. But here are Coinbase, Bittrex, Binance, Gemini, Kraken, primary exchanges for crypto. If you want to change from fiat to crypto, back and forth, very easy. Boom. Let's keep driving on. So you say, well, I'm just going to buy a fund or ETF. No, you're not. The regulators are nowhere near where they should be. This should have been done a couple, 3 years ago, but it's not. They are not on board with this. I mean, heck, even Canada's got an ETF now for Bitcoin, but we don't. I have some people say, well, what about GBTC or ETHE? You know, I've seen that, and you can buy that on the secondary market. Absolutely, you can, and we're going to get to that right now. These are trusts, okay? They are not mutual funds. They're not ETFs. They hit the secondary market, but it's very convoluted. A lot of advisors don't understand this. And again, I could probably do a whole nother presentation on this. But again, if you're interested in this, you should go talk to Grayscale or Bitwise. They're probably the two biggest, best, and they want to work with advisors. But these are private placement trusts that supposedly hold the underlying asset. And I mean, they do, but the big downside of these do not trade in line with the underlying assets that are supposed to be in them. It's crazy. So like, I don't trust this in terms of saying this is how I want to get access to crypto for my clients. Now, and another thing is there's been a lot of big premiums. So like it's been as high as like 200 and some percent that like, say this trust is above the price of Ethereum or Bitcoin. And then it's not even correlating to the underlying asset. So to me, it just blows my mind. It's not very trustworthy in terms of us wanting to build statistical portfolios to be able to rebalance, you know, et cetera. So, you know, real quick, how this works, you got to be an accredited investor. There's minimums, say it's $50,000, $100,000, put in an application, you wire money to them, you have it, you got to hold it for 6 to 12 months. Then after that time period, you could kick it off to the secondary market. And then that's where the secondary market shares come from. And then the scary thing is, if you're just like, I'm just going to buy it off the secondary market, if it's selling at a 50% premium to like what the price of it, do you really want to put your clients in something to where just knowingly you bought something 50% above its price? Like, it's very difficult for me as an advisor to say, as a fiduciary, this is what I'm going to do for some client. And maybe that works out great, but what if it didn't? I could totally see people getting sued for this. Again, I'm not an attorney. I'm not trying to give you advice. I'm just trying to give you my opinion of how these things are. Now, recently, just in the last couple 30 weeks, the premium has just like crashed on some of these. And I think it is because the ETFs are coming out in Canada and other places to where now you're going to see some arbitrage and these are going to come down. Lastly, I mean, the fees, you know, anywhere from, you know, 1.5% to 3%. It's crazy. Now, of course, if you made 1,000%, who cares if you paid 3%, right? But I mean, obviously, that's not sustainable for the long term. Let's throw another poll question in there. Hopefully, you guys caught that. Right. Okay. So driving into the real question from that, should crypto be in clients' portfolios? So just how we started out before I started this presentation, I'm talking about low correlation. Let's look at when we're building portfolios, what's the point of putting different eggs in different baskets, right? We want to have lower correlation so that things are going up and down at different times, and we have the opportunity to rebalance and smooth the rate out for our clients, right? So if we look at Bitcoin compared to these different, kind of assets inside of there, let's just look at the S&P, that's pretty low. It's pretty awesome. But let's take it another step further and look at Ethereum. And then they're not even going into the Ethereum tokens below that. But man, these are like 0 to negative. This is like beautiful. And if it really is a stock-like asset and you get correlation this low, I mean, that's game changing. So a small allocation to something like this, and that's kind of what drove me into really thinking about this for my clients, because I was just like, just in terms of doing it myself, beyond the fact that I made a lot of money, I'm like, I feel guilty that I really believe in this. It's doing really well. I've been able to trade it very responsibly, to just buy low and sell high. And if I could just added anywhere from 1% to 5%, depending on how aggressive the clients were, I knew that I could add anywhere from 1% to 2% per year in extra rate of return, which is that small of an allocation. This was my feeling before I got a lot of the data that you're going to see some of it. And so I've kind of been on a mission to say, how can I do this? And it's very difficult. So this is just another kind of more broad base of just looking at the correlation between the different assets. And, this will be up there. And some of this data I grabbed from this company called OnRamp. At the end, I'm going to put a couple links to a couple presentations from OnRamp, from Bitwise, and from Grayscale. Okay. So, thanks to them, I've been in contact with OnRamp, and they're like, yeah, you can use some of our slides. Just, make sure that you keep our logo on there, and if people are interested, they can come check us out. So they're trying to build a platform to if your clients buy it, kind of themselves individually, that you can work that into the portfolio and rebalance it and try to solve, because it was made by an advisor, to try to solve that problem of the custody issues and et cetera. So one more poll question. This is the last one we've got here. So we'll throw it up there. Hopefully you got this one. Try to make it kind of obvious. Maybe it's a trick question. So our friendly, beautiful chart that you've probably used with a lot of your clients here that you can see, except it has been updated to add some allocations to Bitcoin and even putting Bitcoin on here. And so you can kind of see there the whole last 10 years, for 80% of it, the highest has been Bitcoin. And so you can see here, just with a 5% allocation. So if you did, like, say, what they did here is just use like a 60-40 portfolio and take 5% out of the stock and add it to Bitcoin. Okay, you can kind of see it. Look at that blended portfolio. It's at the top almost the entire time, except for 1 year. And then above, like a regular asset allocation. And if you take the whole, and just 5% over the whole 10-year annualized period over a traditional 60-40 portfolio, 10% versus almost 20, double. Like, I didn't even realize it would be this high. I thought maybe a couple, 3% or would so, but double. And when we actually go a step farther and look at the actual, standard deviation from this, it's like barely higher. It's amazing. And so some people would say, well, what if the rate of return wasn't as high, the next 10 years? First of all, I don't know that that's necessarily going to be true, but even if it wasn't, if you can get a decent, even stock-like rate of return and non-correlation, and you rebalance into that, it's still going to be powerful. Not quite as powerful as what we're seeing here, but still really powerful. So should it be in portfolios? I leave that up to you. Can we do it as fiduciary investment advisors? I don't think so yet. There are things coming. You could do it with your accredited investors and try to, because I think that would be the responsible way to go, because there wouldn't be any premium, if you bought into those trusts or what. So you could be a more aggressive advisor, try to buy those things off the secondary market, right? Even if there's a premium or what so, and then rebalance from it. But hopefully in the next year or so, I think that's what I've heard from, talking to people that are trying to make these products, trying to make funds. So in the next year or so, hopefully there will be a Bitcoin ETF And then it'll probably take somewhere between 6 to 18 months after that to get Ethereum based, maybe an altcoin type ETF. So we're still talking a couple, 3 years. There is one custodian that I've heard, Kingdom Trust, that is trying to roll out where you can buy crypto side by side. I've heard Fidelity is kind of doing it. I don't know exactly how theirs is set up to where, you know, their accreditation, how it's got to be done, et cetera. But there are some positive things that hopefully within the next couple years, either if you want to buy a fund, or if we can straight up buy the currency inside of the portfolios and be able to rebalance it like a fund, okay, that it will be able to happen. So that is pretty much my presentation. I wanted to leave enough room for questions so that, you know, I could answer some of them, but I wanted this to be very practical in the fact that you could say, what is it? How could I use it? And does it even belong in portfolios? So I'll open it up.
Bill, I wonder if we could go over the poll questions and see how they were answered.
Sure, yeah, let's do it.
Let me finish what I'm doing here. I'm gonna mute and I'll bring those up. And you do have a question in the Q&A box now.
I'll pop up. So you can see here, that question was, what's the standalone standard deviation of Bitcoin? And so we can see that right there, about 80.7. Nobody is advising to throw this as a loan investment in there, or even as a substantial part of a portfolio. Yeah.
Phil, I can't ask questions in the Q&A box because I'm a participant. I'm a panelist.
Mm-hmm.
But one of the things that seemed that I came away with when you were defining blockchain and Bitcoin.
Okay.
Bitcoin, I understand, and I got what you were saying about nodes. But can you dive into the weeds a little bit more there for a second to just sort of give a better explanation of specifically, like maybe just use more words to explain what blockchain actually is?
So blockchain is basically an online ledger of like keeping track of, let's say in this instance, transactions that are happening, right? So whether we were using it as a currency or people were collecting it like gold, like Bitcoin or something like that. And so it records every ownership. And each Bitcoin can be broken down into 100 million pieces, okay? So like it can be broken down into really small, so it's recording who owns everything, who ever owned anything. And so we could go back through and see like exactly what happened. And so in this blockchain, it's got that whole chain, and all these different nodes in this decentralized ledger are all keeping a copy of this and re-verifying all the time that they got the right thing, so that you couldn't just get Russia to come on with like 2 million computers and try to just fool the chain to say, we're just going to change this. All the other ones would be like, no, you know, and shut it down hardcore. And then you've got the hashing going on for the new ones, for the new transactions and what's so that are happening. And as that is, the information is kind of decrypted and re-encrypted and verified, then all the other nodes, or at least a certain percentage, it depends on exactly how it works, say, yes, that's right, the new block is added, and then all of the nodes update to the new chain, okay? So again, that's still a pretty simplistic explanation. And then when you have different ones like the altcoins and what's so, this is still happening. And sometimes it's different because they have different verifications, whether you're going to do proof of work or proof of stake, or, and again, I'm not trying to get into to make it too complicated to the technical details. But this general process is happening over and over again to build that chain. And the bigger it gets and the longer it gets, the stronger it gets as well too, if that makes sense, you know? So
at the beginning, let's just say there were 1 million pieces of Bitcoin and certain people owned them, but they hadn't been exchanged for any goods or services or whatever they were exchanged for, they didn't have any value. And as they continue to be exchanged and recognized as currency, they gain value. Is that about right?
Yeah, I mean, it's kind of like that old adage where somebody says, well, why is a stock worth this? Or why is this car worth this? It's like, because we all agree that's that's what it's worth. And so obviously at first, through the mining, people earned the first ones. And of course, people are like, what's Bitcoin? I don't want that. You know, I know a lot of people have heard that story of how somebody paid, you know, multiple, like 100 Bitcoin to buy a pizza. And you think about how much money that is right now, and you're like, oh my gosh, you know. But, you know, obviously it had to get traction, and people had to agree that it's worth this. And then once people understood, and there was a lot more demand for that limited supply, and more people wanted it, the price has gone up a lot. Right. So, and hopefully over time, as there are more cryptocurrencies and they get out and they're accepted, then you're not going to see quite as much volatility because they'll trade more naturally. But again, I believe that crypto is much more like an equity than a currency that's more stable. Now, of course, our currency and the euro is stable. Hopefully it stays that way with all the debt and stuff we have. But not all currencies are that way. You look at like Brazil or other Latin American countries, or the ruble, you know, decades past, etc. That's not necessarily the case either. So, okay. Somebody asked, could we elaborate Bitwise? So Bitwise and Grayscale. So Grayscale was the first company to kind of come up with these trusts of saying, hey, let's make something where you don't have to actually buy the currency. Let's make this trust that people could buy like what they're used to in terms of like buying a fund and have a manager, et cetera. So then they were like super duper successful. They're charging a ton on the management seat. So they're like printing money to just sit on a crypto account, a huge one, obviously. But man, that's a great gig, you know, in my opinion right there. So then Bitwise saw that and said, well, let's do this. Let's do this too, you know? And so they're doing a very similar type thing. So when you go here, you can see the private placement type thing. And on some of them, when you go to the funds, you can actually go there and say, hey, I want to invest. And it'll ask you like, hey, are you an individual? Hey, are you a financial advisor? Let me pre-fill this paperwork out for my client, right? And these guys and girls, and if you want, I can send you over who I've talked to wholesaler wise or whatsoever if you email me. They're more than happy to educate you. That's where I've learned half the stuff I have about these couple companies and how these trusts work and the premiums and how you should use them is straight from them, right? Because they have a vested interest and wanted to do business with you. And then that on-ramp I was telling you about as well too, they're trying to make more of a solution, like a platform type thing, rather than trying to make a traditional like fund or something to sell you and make a management fee off of or what. So this is not up and running, but they're working on building this. So let's see here. Let's see. So it says, explain how Gemini is different from Coinbase. So all of those, let me go back to my slide on that. All of those exchanges, they're fairly similar in terms of like what their purpose for existence is and how they do it. I can tell you from using them that that they are very different in terms of the customer service that they provide, which for most of them, Coinbase included, is like nothing. Like I've had a lot of problem with Binance and Coinbase. Like Binance lost a bunch of app coins for me and I'm still fighting with them. I mean, to where I kicked it up to the regulator. And then they'll send me emails saying, we're working on this, we're behind on tickets. It's like, you can't lose somebody's money and not get back to them for weeks. Well, obviously they can. And you hear some of these stories. So that's why I said it's not ready for private. I've never had any problems with Gemini. Gemini is pretty good relatively to like, I mean, dang, it's not a high bar to jump over to be good for the field that they're playing in. But I've had problems with Binance and Coinbase, like seriously. Bittrex and Kraken a little bit, and Gemini has been really good. And then I haven't had any problems with Robinhood. But you've heard some of those stories, like even that kid that killed himself on that options trading, like their customer service is horrible too. You know, so they're really like tech companies, like trying to do things more than what we would traditionally think of as a Schwab or TD or Fidelity, where you can call, and even though they may put you on hold for 30 minutes, you're going to talk to a person and they're going to resolve it. So, you know, we'll see as more money flows there. Hopefully they'll beef up their stuff, or if there's any enforcement action, then I'm sure if they want to play and not get driven out of the game, they're going to have to beef up that stuff. So it says, once all Bitcoin has been mined, what will be the incentive for participants to maintain the system? So I didn't go over that a lot, but when transactions are happening, and the easiest way is when you look at those Ethereum-based tokens, so any of them, say it's EOS or NEO or any of these that you might trade. The interesting thing is when you actually do it and you want to move it even from one wallet to another wallet, even if you're just transferring it to yourself, then there's this stuff they call it gas. And that's really almost like the little small micro payment that you're making to like almost put up for auction to say, hey, I'm willing to pay this. Now, usually your computer or your wallet or your exchange does it automatically for you to process this transaction. And then those miners are out there, and like mine with the nice hash, some algorithms figuring out what's the most profitable to do where. And so the less gas you're willing to put there, your transaction might take longer or have less priority, right? If somebody like doing some big deal, like JP Morgan buying something from AXA in Asia, and they're going to deal $100 million and pay a pretty good fee, that's going to get crushed, to knock that out real quick, right? So it's a system like that. So again, I'm not going to get total into the nuts and bolts of it, but hopefully that helps to answer that question. Riot blockchain, I assume it's a miner, or is it a currency? Things. I'm not familiar with that. Pete, I can look that up afterwards and just tell you, because I mean, I know a lot of the stuff. So I'll just look it up and I will get back to you afterwards and let you know. It sounds like a miner though, because a lot of these things are algorithms, because I can tell you like certain things that I mine, like different algorithms will pop up, and some of them are mining the same thing. It's just somebody wrote something more efficient to hash this better, right? So when you get a lot of these things that have those gnarly names, a lot of times it's a different program to use your hardware to hash something more efficiently, hopefully, right? Make more money. You mentioned several times that Bitcoin is not your cryptocurrency of choice, that you really prefer Ethereum-based tokens. Can you explain that a little further? It really has to do with what I was talking about right here, okay? Because to me, the technology is just really elegant. It is like, it's a solution that's going to solve so many problems, like when you get down to here. And the Ethereum-based tokens, like what I'll do a lot of time, when I first got into this, and I still do it because there's so many of them, I'll look to just kind of see if I think something, I hate technical trading, but that's where we are with cryptocurrency. I'll look to see if things are relatively like where I want to buy low to get into something new. And I read the descriptions of different cryptos and research them. And I'm like, wow, that has an awesome use case. I really think that if that was successful, it'll change the world. And so to me, when I'm like thinking or looking up things like that, that's what I mean by like Bitcoin. To me, besides the fact that all the big money wants into it now and there's a limited supply, like Bitcoin is not going to do anything except for be a home for those huge millionaire and billionaires. And since we can break it down into hundreds of millions, anybody can go along for the ride, right? But in that respect, it doesn't do anything practical. I mean, you could use it to build some things on top of, you could use it to buy something, but it's really slow. I mean, I tell you, if I try to take Bitcoin from my cold wallet, and again, I'm not going to get into everything on how you do it, but from my cold wallet to like a hot wallet or up to one of the exchanges to trade it, like it could take a half a day. Or I've had where it's a day and a half before my money shows up. Like, that's crazy to me. I don't, like most of my other cryptos, it's like if I move it, it's there within a few seconds, like somewhere else. And to me, like that's very practical, like on the currency type thing. Or if I wanted to pay somebody or whatever the case, I don't want it to take forever. And it's scary sometimes too when you're moving a lot of money and you're just like, show up. Because like the keys that you get, your addresses for your different, they're really long, and you got to make sure that they're perfect. And if you do the wrong thing, you can just totally lose your money, and it's like can be gone into la la land. It's not like your bank transferring something to Schwab and then something got messed up and you ask them to pull it back. You can be gone. Okay, so you got to be careful on that. So it says, would you suggest investing directly in blockchain technology and companies embracing it, or cryptocurrencies as a proxy? So Kevin, this is like a tangent here. I half the reason like to invest in crypto and some of the stuff, because I think a tangent of what cryptocurrency and all the hashing, and even though people say it's a waste, I really believe in artificial intelligence and I want it to happen. And you know where it's going to come from? It's going to come from GPUs. And so all this money that's being dumped into NVIDIA, AMD, like making these awesome chips, like this is the groundwork for artificial intelligence. So it's almost a tangent to what you're asking. Like, I love to invest in this stuff and have all these GPUs, which basically pay for themselves and make me money. But to me, I'm investing in artificial intelligence. So anyways, your question directly, I would say is, man, it's tough. I would definitely probably do the crypto more than the technology, because it's tough to see where the technology is going to go, you know, in terms of what's the next thing going to be. You know, is it going to be silicon or this or that and the traditional chip makers, or is it going to be this? But the underlying problem it's solving and the utility it's going to provide is going to be directly from the cryptos, and the technology is only going to serve that happening until the money makes the AI happen, right? So then it comes full circle back again. So sorry, didn't mean to go down that tangent. What do you know about Rick Edelman's RIDAC organization and their certificate? I don't know. I like Rick Edelman. Let me pull up your link here. I don't know much about it. You know, I apologize on that. Personally, I'm just kind of a nerd that does this myself and has invested a lot of time and energy into looking like how I could serve my clients with it. But I'll definitely look into this. So I apologize if that's not a question I can answer. What happens in a sell-off if there are all sellers and no buyers? So obviously, like in any market, if there's not buyers, it will crash to nothing, right? So so obviously that could happen. That could happen in any asset class, and a lot of times that does happen. That's how the bond markets lock up and the spreads will go crazy, right? And it does happen sometimes, but eventually somebody will come in and buy at bargain basement prices, and usually that ends up being a very profitable and productive endeavor. So personally, if that happened, I'd be very happy that it happened, because at some point I would be one of the catchers at the bottom. I tell you, on all those exchanges, pretty much I'm almost all in cash now, besides just a couple of cryptos. And all of mine are just triggered with cash on limit orders on the bottom. So again, I'm not giving you investment advice. You got to figure things out kind of for yourself. This is more about what it is and what's so. But I have no doubt that this is gonna come down again, but in the long term, it's going to be successful. Just like, you know, I believe in Tesla. Like, I have one. I stood in line for years to get a Model 3, and it doesn't surprise me where it is. Is it overvalued? Probably, you know. But if they are a technology company. People are like, oh, they're valuing an automobile company like a technology company. It's like, that's what they do. They build they build cars around computers. Like, I actually just got mine upgraded to full self-driving, and they took the computer out and put a new one in and upgraded the sensors and stuff. So it's totally different than what the other automobile makers are doing. But is it overvalued for where it is? Yeah, for sure. You know. So anyways, hope that helps. Looks like we answered the questions. Thanks so much. We did. For your time and attention, and reach out to me if you need something else.
Yeah, well done, Phil. Appreciate it.
Yeah.
It's a hard subject to get your arms around. So appreciate just the exposure to what's out there and what we can maybe expect moving forward. I know this, you know, some of the questions are probably below what you're used to answering, I guess, if you nerd out on it. So really appreciate you taking the time to answer everybody's questions, including mine.
Absolutely.
Okay, everybody. Well, it was a good meeting. I appreciate you being here. We will, as I say, sometime this week, the presentation will be on PDF on the website, as will the recording. And we'll look forward to seeing you next month.